Hi and welcome to another training video. We're going to jump straight into the gold today, and the reason I'm doing this is because a student has sent in a question on how we should trade this and what he's looking at, because it's not something I look at all the time. I'm looking more at the currencies. He asked me how I could set P.A.T up to trade this. So what I did was I went in, set up the P.A.T indicator showing the gold chart so I could tell him what to do and what to look for, etc. Now, just add to this very quickly that when you're a student, as you know, you should know by now that if you want any help, all you have to do is send in a question. But most importantly, if you send in a loom, there's a screen recording, which is what we're going over now. If you send in this to me, I will respond directly back on that loom so that you have a learning reference built up in your own training library, as it were. So it's an incredible offer there for you, and it's yours. You just got to ask, and I'm more than happy to do it. And so don't delay. Get your questions sent in, get your loom sent in, and I'll go over it the same way that I'm going to do this now. So let's get over onto the screen and have a look at what we've got set up. So here we are, the gold. Now, I'm just going to start off on the 30-minute, and the reason I'm doing this is because I just want to take an overall global look at this and see what's going on. The other indicator I have on here, so I have two indicators on. I have the P.A.T indicator on that you can see up here, and I also have the Sonar Lab sessions. And all this is to give me a look at when the sessions start. So I'm looking at these sessions in terms of these are times when I want to be paying attention. Here in New Zealand, looking at it's about 12 p.m. and then 8 p.m. I believe London time. These are sort of times that I have the opportunity to look at the market really. So you should be timing this around the times when you're available to trade, because another thing as I get questions is, can I have time to trade? Am I going to be around the screen? Well, put on this indicator, have a look at the sessions and see when you can be around. See if you can be in which session is going to suit you. And so the answer is, if you can find a session that suits you, yes, that's going to work for you. Okay, so the first thing I want to look at is, forgetting about the session for the moment, I'm just going to look at the overall blend of the chart. I see I've got P.A.T indicator set up. You see the dots on here, the green dots and the red dots. This gives us a heads up on the trend. What I'm looking for is particular types of action or activity, and that's how I'm going to choose my trades. Now, for example, we can see that the yellow blocks here, let me just put a marker on here for you. The yellow blocks here, these are whale indicators. What are they? They're telling us when the whales, the big players, enter the market, okay? These are times when we want to be paying attention. So P.A.T picks these up, and if you look at these, it doesn't take too long to realise. You can see they occur here, they go here, they turn here. You know, these are at points when the market actually starts to move off. So just by having those alone, you can make money trading the market. But let's move on from there. It gets a lot better. Okay, and also what we have, I'll put another mark on here for you, is you can see that we have the pressure points. Again, you can see these, just how effective these are and what these are telling us. And you can see how these, again, have the effect of supporting the market. This is when they put pressure on the market to go in a particular direction. And you can see that when these break through is when we get the continuation of the up moves. Again, look at the whale entering here, which just temporarily pushes the market down before once again it gets back into its up move. Okay, so I'll leave those two markers on to give you an idea of what we've got set up there. Okay, so the market opening up, and we see the session down here. So in other words, I'd be looking at the market around this time here, and of course this time here as well, and the 8 o'clock session as well. So I'm seeing that what's occurred through this period down through here, you can see this market has come down here. I can see that P.A.T has put in an indicator here showing me there's going to be support. The market then pushes back up through here. So if I'm sitting at around this area here, I'm looking at the 30-minute. I want to get down onto a lower time frame to find out where I'm going to be able to enter this market at the lowest risk possible. Okay, so let's just have a quickly look down, because what I want to do is I want to drill down. I want to find myself the trading opportunity with the lowest risk possible, smallest stop for the greatest reward potential. So I'm going to go down first off, and I'm going to have a look at the 15-minute. Okay. 15-minute. I just want to say, let's let you know, by the way, that this in this purple line that you see here and this one here, this is P.A.T detecting these automatically. You don't put these on; it automatically detects these. This is where the whales spent most of their activity on that at that particular time of trading. So you can see this is here, for example. This is where the whales entered in the largest volume there was, and this then pushed the market, as you can see from here, And again, this is where they entered in the largest volume up here and pushed the market off from here. These are very important. Pat puts these in automatically for you. You don't have to worry about any of this at all. All fully automatic. Okay, so as I'm seeing this down here, I'm down to a 15-minute chart. I'm looking for an entry out of here. And you can see that this is what it occurred through here. So this is a bit on the 30-minute chart when we put the marker on. So straight away, as I can see, the market comes down through this here, puts the pressure in here, and I want to see a bit of a retrace. This is what I want to see. I want to see the market confirm it's going to move up and then come back down again, and then I want to get into that changing move. So I have two opportunities here. As the market comes up, you can see it comes out of here from the pressure point. It comes up through here. Remember, I'm not looking at the moment. I'm not looking at the market. I'm waiting for the market to open, which is the Asian session. Market then starts to come back through. The Asian session opens. It is driven down. It puts in a pressure point into here, and I am ready to buy this market. I'm expecting the market to move through the Asian session. We're going to get volume. We're going to get activity into the market. I'm expecting this to happen. And so P.A.T has told me there's an indicator here, so I'm going to get in here. Now, when I see the market go up to here, at this point pressure here, I'm going to close this trade off. Highly likely I'm going to close this trade off because it could well, from this point on here, we could definitely run into the resistance and we could get this push off back down as we've gone here. So I'd be very likely to close this trade off here and take my profits out of that point there. What I'll do then is I'll look for another low risk opportunity. Now, you can actually see down here as the market then comes back down through this point here, look, you can see the whales enter again down through here. Again, giving me a great opportunity to buy into the market. I'm still in the Asian session and the market gets on and trades on through up through the Asian session. And you can see at this point here, of course, we open up the London session as well. Now, I wouldn't be sitting around at my screen this time. I'd be having a target set up here to exit this trade. And I'm just going to have a quick look on here by putting a range on here, because I do like to trade, overall, I like to trade for around, for the 90 pips zone, as it were, on there. Okay, and so we can see there, that's the range there for the most. So I'd be following this trade up, following up, and I'd probably be stopped out around about this level here to there. Okay, so that's that one there. Let's just get rid of that on there. So hopefully you can see from there that what we're talking about is quite a simple structure. So I'm waiting for a particular time, I'm waiting for the market to open. I want to see that open, this Asian session, because I know at that point I'm going to get activity, I'm going to get momentum in the market. That's when I want to be there. I don't want to be sitting here looking at the chart all day. It drives you insane. I did that for years. I did that for nearly 3 decades when I lived back in Spain. That's when I was highly active into doing this all the time, like moment by moment, 12 hours a day. And I don't suggest you do any of that. It's got major consequences for health that you don't want to even know about. So much easier to look at these times, and particularly this time I've gone through here, which is the Asian session. Like I say, you set these times up ready for, so it suits your lifestyle. That's what I'm trying to get at. That's the message what I'm trying to get across here. Okay, so let's get back on there. So that's the trade running through there, and then if you look at the New York session, which is quite not too, so you see the London session rather here. You can see this starts at 8 p.m. and then it goes down to, comes back down through here. You see we get the, Pat puts in the pressure point here. I'm long in bed at this point. This has gone past my trading time, as it were. And then over when the session opens again. Now, here at this point, I don't really have anything. You see, I haven't got anything, a P.A.T indicator here. I haven't got something. I'd like to see a pressure point here or the whales entering on here. But what I want to do is I want to drill down on this, because I can see I've still got this continuation coming through here. I want to drill down, maybe at a lower time frame, I can actually see something else that's happening. So again, what I'm going to do is I'm going to move down to the 5 minute in this case. Let's click on there and have a look. Now, what I'm actually going to do, just so we make this easy to come back on here, I'm just going to put a marker on there so that when we go to the 5 minute, we haven't got to scale around looking for this. Okay, so this doesn't really give me a great deal on here. Now, there is something I see on here, but it hasn't been highlighted with a P.A.T indicator. And part of that reason is because you can see the floating zone is now so far away from where we are. Okay, that's because we've gone down to a much lower time frame, whereas the floating zone has been set up for a longer time frame. Now, you could retrim this if you wanted to onto here. I don't generally do that, and certainly I haven't on this because it's a gold chart. And like I say, I don't normally trade this. I just got this for student purposes. But you can see what happens here is that notice the market drives down through here. comes back up here, and what I would expect is a concept of called filling the voids. Okay, now I've explained this before, but what I'll do now is just try and explain this with my hands, try and make it easy. Filling the voids. Imagine you have this bar this big, and it takes a time, and it goes tickety 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 up and down, up and down, up and down, and it becomes quite a condensed space of bar. Let's condense a lot of trades within that time frame. Let's say that bar that we're looking at. What we have is when we sometimes get a wide bar, you can end up with a situation where there are voids within there. So in other words, the price is much more likely to jump around in brackets, as it were, rather than very close, tickety, 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 tickety. Okay, that's a very highly technical term you're listening to there, tickety, tickety, tickety. Okay, so that's what I'm looking for. So when I say filling the voids, I want about the market going away from this. So in other words, it jumps up like this, maybe down a bit like this in large blocks, and then it starts getting into an up move or down move, as the case may be from there. What I expect to happen is the market to come back and to check out the voids, to check out the gaps in between that bar, if you like. I may expect the market to come back around here, and I call it filling the voids. It goes back and trades within the voids. It's almost like it goes back to test the strength and weakness in that particular bar. And the way to spot this, and then what you want to do is you want to look for the retrace back roughly to around the center point of that particular bar. And if we look at that, we'll see, let's just get a marker on here. I done that last bit, not looking at the screen. I was looking at the screen, you weren't. I'm going to have to go back and do that bit again now so you can see that, because I hadn't pressed it. And that is there, it's all going off. And that was an exercise tip for me to get out and do a bit of exercise instead of sitting at the screen. This has turned into a crazy, crazy video, but never mind. This is trading. So let's get back onto the screen. Okay, this is what I was talking about. When you were looking at me, the top of my head, as opposed to looking at the chart. There you see the point I said about the New York session opening up. I got a marker on there showing you that. There's the pressure point. You see then the market picks up, comes back down, and I talked about filling the voids. That was on this bar here. I drew that line in again while you were looking at the top of my head, and you can see then I talked about where the market come down almost to there, then came down to there, and then got into an up move. Okay, that went on a little bit longer than I thought. You got to see the top of my head. You got to hear the alarm going off for the exercise routine every half an hour. I get down to do a bit of exercises to keep myself going. And it's all right, something else opened up there. And anyway, I hope that helps. And I quite enjoyed making this video. It turned out a bit of a weird one, but nevertheless, it accomplished the goal, as I say. Anyway, so have a great day, and I will catch up with you very soon. Don't forget to send in your training videos. I love to update them. Keep going. Take care. Bye bye.